So today's video, we're going to be going over the MacroHub specifically inside the Cognito terminal. Obviously now with the new update that came out last week, you can now actually add it as an app on your phone, desktop, laptop, etc. So you can literally just add it to your dock on Mac like this, or you can click on it from your launchpad like that. So we'll be going over the MacroHub, which is essentially this terminal style sort of dashboard, which tells, for me, I use this thing every day, whether I'm doing my Sunday outlook or whether I am thinking of getting in a position and I want to see whether the institutions are looking at the same positions as me, what the news is, are there any key events coming up, seasonality. We'll go through all this. We'll go through all these individual sections in a minute. So yeah, essentially this MacroHub gives you analysis on the whole of G8. So we've got dollar, pound, euro, CAD, Australian dollar, New Zealand dollar, yen, and then the Swiss franc. We'll obviously go through all those sections as we go through this video. So starting off with the risk sentiment gauge, which is this thing here on the left. Before we actually start, I will mention that these view buttons here, if you click on them, it will make the section enlarge. So if you struggle reading the smaller text, click this view button and you can get it on a much larger scale, so it's easier to read. But yeah, essentially this risk sentiment gauge tells you whether we are in a risk on market environment or a risk off environment. Obviously right now risk sentiment is sitting at around 21%. This is due to obviously commodities, like gold doing quite well. Although we had a slight pullback, the fundamentals haven't changed. Gold's doing quite well. Equities are taking a big hit. Oil's rallying off geopolitical tensions. Bitcoin's falling off sentiment. So obviously what this thing does is it takes all these factors, puts it together and comes out with a number, which obviously in this case is 21%, which is risk off. Obviously that's due to stuff like geopolitics. I mean, tensions in Iran are heating up and then everything else I've just gone through. If you click on this, it will actually give you an impact analysis on the specific currency. So obviously here we have the dollar. So for the dollar, this is very good for the dollar, as obviously the dollar is a safe haven. Give it a pause, go read through that. But essentially, yeah, if you can look through the pound, euro, CAD, you look for all of them and it will have its own currency analysis on the risk sentiment gauge. So let's say we were at 80% and it was risk on, you'd obviously then see a different definition or a different analysis. So yeah, that is a risk sentiment gauge. Trade flows then, which is this section here, is very, very good, especially for commodity currencies like the CAD. But essentially what it tells you is the currency's main exports and imports. So let's say we see the tech sector start to take a bit of a hit, we could see some negative repercussions on the dollar following this. So yeah, that's pretty self-explanatory. Insights. Now this is definitely my favourite page, my favourite section, for sure. So here you can look at all these institutions and it basically tells you whether they are bullish or bearish on this specific currency. So looking at the dollar here, if we scroll down, we could see, we'll click on this insight here from Danske Bank and it says Danske Bank are bullish. They say a tactical window for a dollar rebound. That's obviously the summary. We then have key analysis, which you can pause the video and read through there. And then obviously we have at the bottom here, this is bullish for the dollar. Then another example is here with Goldman Sachs, where, give it a pause, read this. They're bullish on the dollar, bearish on the yen. And then if you get up the dollar yen chart at the time of this video, you can obviously see dollar yen's doing quite well to the upside. We've even managed to capitalize on a couple long positions. So yeah, that is the insights page. Moving on to the Fed page here, obviously for the dollar it's going to be the Fed, for the GBP it's going to be the Bank of England, etc. But here we basically have the current base rate, the last decision, was it a cut, was it a hold, was it a hike, when the next decision is, and then the probability of the next decision. So the next Fed decision in March is 90% going to be a hold, which brings me on to the Fed Watch. So if we actually click on this, we can get a better view. The Fed Watch basically tells us where markets have priced in, what markets have penciled in for the next meetings. So the March meeting is, like we said, 90% for a hold, 11% for a cut. April, 74% for a hold, 24% for a 50 basis point cut, 2% for a 50 basis point cut. So obviously you can pause it here and have a read through all of those. These are constantly changing. Obviously, as new data comes out, markets price in more cuts, price out less cuts. So yeah, this is definitely good to I use this a lot, especially for the dollar. For other currencies, we'll go through this, but obviously there's not a Fed watch for the pound or the euro. So what we actually have there instead is a recent comments page. I'll show you now, actually. So if you go on the AUD, you can see recent comments here from Bullock, Kent, Hunter. These are all members of the RBA, and they are basically, you can just navigate, okay, are their comments hawkish? Are they dovish? Are they neutral? Etc. So yeah, that is the Fed watch, obviously, for the US, and then recent comments section for the other currencies. Looking at yield reactions here, this is very good. It can kind of give you an insight onto whether the data coming out of the said currency is more hawkish or dovish. Obviously, hawkish being positive for a currency, dovish being negative. So if we click on just FOMC here, obviously we had a neutral reaction, essentially a non-event, minimal reaction from fixed income. 2-year moved barely anything, 10-year barely moved anything. Give it a pause, look at FX implications. That's obviously for a neutral data print, but if we look at for a hawkish data print like the January unemployment claims, we can see that we saw an 86 basis point move to the upside in the 2-year, which is very hawkish. So if we look here at FX implications, we can see that this typically supports dollar strength. And then what happened once we got that print? Well, we saw dollar strength. So yeah, very, very good. I love this. If it wasn't for insights, the yield reactions is definitely my favorite. But I think insights just takes it for me. Recent news, this is very good. It basically pulls news from all the major sources: Bloomberg, Reuters, Barron's, Washington Post, a bunch of highly reputable sources for the live news. And then I don't know if you saw, but when we were on the Australian dollar page, we obviously have the currency analysis next to the news. So obviously this was more neutral for the Australian dollar. However, this news release from Bloomberg was more bullish. This is more bullish. This is more bullish. This is neutral. And obviously we have that for every currency. Fed events. This section here is essentially going through all the near-term events which could sway the Fed. So data releases, central bank meetings, central bank speakers, stuff like that. And then obviously the H here is high impact. So all these are high impact. Obviously we've got payrolls job growth on February 11th. That's obviously been moved from today. And yeah, that's essentially to keep you on the radar for upcoming data releases. Looking here, this obviously we know the Fed, we know central banks in general have a dual mandate, which is to keep a healthy labour market, but also monitor inflation and reduce price pressures. Obviously they want inflation between the 2 to 3% bracket. So the labour market, if we just click on this first, you can scroll about, you can see, all right, on January the unemployment rate was at 4.4% and NFP came in at 50k. For December, unemployment was at 4.6%. So obviously we're seeing an improvement in unemployment, and NFP, bit of a slowdown in NFP, but nothing major. No big swings there. And then inflation, same thing here. We can see in January, core inflation was at 2.4%, whereas CPI year over year was at 2.7%. So yeah, very, very good. I'm a fan of this tool. Kind of keeps you up to date on all the macro data and all the meaningful macro data, because combining the yield reactions with these two, you get a good picture of where the economy is in general. The seasonality index, this is definitely good as well. This is almost like an additional confirmation for me. So if I'm thinking, okay, I'm bullish on the dollar, and it's also January, perfect, another confluence. You can either have it as a bar chart or a line chart, up to you. I prefer the bar chart. Scrolling down here, we then have the currency strength index and then the currency strength heat map. So essentially we've got it in a line chart. You can say, all right, I don't want to look at the CAD, all right, add the CAD, so you can filter in and out all these different currencies. Similarly on the heat map here, if you click on this, you can look at it from a 1 week perspective, 2 week or monthly. So yeah, that is a very quick run through of the web app. I mean, I'll show you another page just to give a bit of a variety. So like Australian dollar, this page here, you can see that we're having a lot of hawkish reactions. Credit Agricole have come out and said that RBA have performed a hawkish hike. So obviously we're now a bit more bullish on the Australian dollar. The recent news supports this. Bloomberg are coming out as more AUD bullish. Yeah, great tool in my opinion. I mean, I don't know much else which is on the market which provides this much value for this cheap price. I mean, when we were building this, we were looking at competitors, and I mean, some of them it's like $200, no, $150 a month, 1.2 grand a year for resources that even come close to this. Whereas obviously we're 40 call it $50 a month with our discount code. You're looking at $25 a month. Obviously, if you don't know, the discount code is Cognito50 for your first month at half price, just so you can really check it out, see if this tool is for you, see if it improves your trading, see if you actually enjoy using this tool, if you like it. Obviously, we have way more features than just the MacroHub. We've got a crypto page, research page where we put weekly outlooks, weekly recaps, calendar, which is that in more detail, newsfeed, which is that in more detail. We have a chat room, which is very good. We put in all sorts of trade ideas in there. Trading journal, so you can actually link your MetaTrader account to the journal, and you can monitor your performance. We've even got some AI analysis in there. I mean, if I click on that now, actually, I'll show you. So yeah, it gives you a decent analysis on everything. Trades, all the trades you've taken, analytics. You can generate some AI analysis, but this is for a different video. We won't go over that now. So yeah, that is essentially the MacroHub for all current users who are interested in using it or wanting to get a bit more clarity, and then also for new users who are thinking of joining. This is the MacroHub. I mean, we think it's great personally. So yeah, that is it all from me. As always, any questions, shoot them in the comments. Shoot us a message on our social medias, which should be in the description of this video. And yeah, code Cognito50. Don't forget, because it's a half price on your first month. Who doesn't want that? So yeah, that is the MacroHub summed up in a relatively quick video. Yeah, I'll see you in the weekly outlook, which will be released on Sunday. So yeah, let's have a good one.